Hey there, it's Krista from the Accounting Doctor. If you've recently sold a rental property or you're thinking about it, you might be celebrating a solid profit. But before you get too comfortable, there's one tax surprise most investors don't see coming until it's too late. Depreciation recapture. It can take a big bite out of your proceeds, and today I'm walking you through what it is, how it works, and what you can do to soften that blow. When you own a rental property, the IRS lets you depreciate the structure, meaning you can deduct a portion of the property's value each year, even if the property is going up in market value. That depreciation lowers your taxable income while you own the property. Great, right? But when you sell the property, the IRS comes back to recapture those tax savings. In other words, they treat depreciation you claimed as a gain and is taxed often at a higher rate than you expect. This is what's known as depreciation recapture. It can be taxed up to 25%. Now, let's say you bought a rental property for $400,000. Over 10 years, you took $150,000 in depreciation. Then you sell the property for $550,000. You're not just taxed on that $150,000 gain. The IRS says, hey, we gave you $150,000 in deductions over the years. Now we want some of that back. That recaptured depreciation is added to your taxable income and is taxed at its own rate, separate from capital gains. It is one of the easiest ways for investors to get caught off guard. Now here's the good news. You can plan around depreciation recapture if you know it's coming. Here are a few ways. First, you can use 1031 exchange. If you're planning to reinvest those proceeds into another property, a 1031 exchange can defer both the capital gains and depreciation recapture. Second, if you sell it when you're in a lower income year, if your overall income is lower the year you sell, your total tax exposure may be reduced. Lastly, work with an advisor early. Before you list the property, get a tax projection done. That way, there's no surprises at closing or worse, next April. At the Accounting Doctor, we help real estate investors not just file taxes, but plan ahead to keep more of what they earn. If you're thinking about selling a rental property or just want to understand what your exposure is, reach out. Let's run the numbers. Make a plan before the IRS sends you an unexpected bill. Till next time, stay calm, stay informed, and let's handle the stress for you.